All right, ladies and gentlemen, I hope you had a wonderful day. I wish I could start these videos off a little bit more calm, but the streak continues, and once again, the market closed green. It may not look like a lot. It may even show up red. You went down a little bit after hours, but I'm telling you, this was another green day, and why this is crazy, because the last 12 of the last 13 days have been green. This is absolutely wild because remember, we were talking about how 12 days in a row, 14 days in a row, that like never happens in the market. Well, you had one red day in between, but now you have gone from quote unquote oversold to overbought extremely fast. It's only been about 2 weeks. So Chad, we have a lot to talk about. I have good news and bad news. We got to talk about the bonds. We got to talk about the market taking a breather, and then we have to talk about what happened today as well as the calendar and then some of the plays. So I have all of that for you, what I need before we get into any of that. A thumbs up on this video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there live in the morning and the whole trading day. Oh yeah, run it, baby.
Working to the couch, it's a 20 legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, we're going to start off with what happened today and the move that we had. The interesting part was that the bonds gapped down in the morning and the market was gapped up. We hit a new high, and I'm sure you have seen this many times before. We hit a new high and then we sell off. Today, it wasn't that bad, and what happened in the morning, we had that data. We were talking about it being a speed bump. It had the ability to make everybody party, but at the same time, even if it was bad, we weren't expecting it to totally wreck us, but what you got was a little bit more of a confusing reaction. The PPI dropped, and it came down a lot, so much. Once again, once economic data, even if we want to see it come down, even at one point, even with inflation, if it does come down too fast, people will start to bring up other questions. You got a little bit of that with PPI, but generally speaking, it did confirm the trend of inflation going down. This number coming in negative, that was positive, but now this is where it gets tricky because we were saying retail sales, this is the most important thing for the Fed and had the most likelihood of moving the Fed future. So what happened? It came in negative 0.1, and everybody was expecting anywhere from break even to -3. So either way, it came in, but not to the point of beating. Nothing was a surprise. It was weak, but not the weakest. But once again, it wasn't just about the print, unfortunately, on this data. But in the morning, this number used to say 0.7. They revised last month, which everybody was surprised that it went up. They revised that up by like 0.2, I believe. So that was how everybody took it. Was it better than expected? By a little bit. Some metrics, people said it missed, but for the most part, it wasn't anything new, and it leaned on the side more so of negative, with the revision coming in a little bit hotter. So that's what we had to deal with, and it caused a weird reaction. And one thing I do think, as part of the full narrative, a lot of people miss, the Empire manufacturing numbers, these aren't the biggest set of datas, but it came in as a very strong beat. So you had a lot to deal with, and like I said, the bonds were already down in the morning. It kind of had a little bit more of an effect. They edged down to pretty much right where they got after everything. It's not like you had too dramatic of moves. If anything, it was all about where the markets were in relation to yesterday, and then same thing goes for the bonds. Bonds gave up half of their gains on that rally. The market hit a new high and then pretty much ended up right where it closed or near the highs of yesterday. So for the most part, the data didn't move much, and now I hate to be the bearer of bad news. This is going to come into some of the theory when we talk about it, but the rest of the week, it's not that crazy. You're going to get the Japanese balance of trade, some export and import numbers from them tonight, China house data, but then tomorrow, it's just Fed speakers. There will be the Philly Fed, and and this could be big. We've seen that at other times. You are going to get our import prices and other things, even the jobless claims. And although the jobs market is important, we have yet to see in a very long time. You got to ask yourself, when was the last time you saw a jarring move on the bonds or the market because of the jobless claims? It doesn't really happen too often as of late. So I don't think it's going to move us too much, but if you keep going through the calendar, you'll see everything else. It's not like we have any of that main data. There will be a ton of Fed speakers tomorrow, but up until Friday, even unless we have to deal with the debt ceiling, that's probably going to be your biggest market driver. But even next week, you don't have too much lined up in terms of the big meat of the bone data that has been causing all of these moves. So I hope you're ready to be patient, and the holidays are around the corner. So that's what we have to deal with today. You see what we're going into tomorrow. Bunch of Fed speakers, shouldn't be too much data. And now we have to ask ourselves a couple of questions about what we just went through. So now the second thing I want to talk about, and it was a big narrative of today, we even discussed this yesterday, it's what the F happened with the bonds and why did they give up and why did the market go higher? And this is something I cannot stress enough. Equities don't matter. I don't even think Jerome Powell cares if the market goes up enough. I know a lot of people are talking about the doom loop of financial conditions, and although that may be important, I really don't think Powell is worried if the market goes up too much because he could bring it down in a second with a couple of words, aka the good old jawbone. So that could do a lot of damage, but you have to notice, bro, 2 weeks back, the bonds are still at this same level from post-Powell and the last non-farms that we got. So think about that here. The market is absolutely ripping. It was ripping before that. The bonds really didn't, and the market keeps going. It is in their own world. Equities are doing their own thing, and I do think a big portion of the story is remaining in bonds. So what happened today? It's what we talked about yesterday, where we were saying this was an outsized move, even for how small of a data beat it really was yesterday. People were very excited on the bonds, but some people were saying that's way too much, like the Price is Right game. So this morning, that narrative definitely shone through. There was a lot of people saying it was just a short squeeze, and we saw it give back some of those, and that's why equities were able to go from here. But that's why now moving forward, you got to keep your eyes here on bonds and whether or not they get back to that range. We are back above 4.5 on the 10-year now. You remember how important this chart is. I keep showing you over and over. I'm good. I'm glad, though. I hope you're getting familiar with it, but we're right back above 4.5. So like I said, this is a sweet spot if we could hold it, but think about it. This has already been a month. You've seen how this moves, and we've been documenting it on the way up and the way down. It's going to take some time. So that's why coming into this week by Friday, what people are looking for is if bonds are going to hold this rally, how much of it are they going to give back, and that's going to help you determine, this is real demand, or maybe it was just a short squeeze, and equities and bonds are still going to kind of do their thing, or at the very least, bonds are going to have a leash on them. So that was a big, big deal of today, and I'm sure we're going to watch that coming into the next days. And now, with that being said, it's the final thing we got to talk about, a breather, man. A lot of people have been asking for a healthy pullback. This rally is insane. I'm telling you, just historically, even with one breather, one red day already, it's not like we have calmed down too much, and certain things haven't moved that crazy. It's clear equities are doing a lot, but there was a lot of carnage that led into this. But now coming into the rest of the schedule this week, I would not be surprised anymore if we kind of hold a little bit higher and then dance around for a little bit, because you don't have much data this week. You have some Fed speakers. The China stuff today didn't even move much. You're going to get a little bit next week. Maybe the bond auctions move it because the bonds still have room to go, and everybody has been hyped up on there. But at the same time now, I really wouldn't be surprised into the holiday, although things do get bullish. So I'm not ruling out the ultimate melt up, which a lot of people want to see right now. But for the most part, like I'm saying, the next couple of days, I would not be too surprised by a breather. And like I'm saying, watch the bonds, because we've seen this before already. I wouldn't be surprised the day that we do have a breather, the bonds might go up, because the days that we have gone up, you've seen the bonds go down. So keep all of that in mind. We're going to watch tomorrow. I think it's going to be chill. Be prepared for chop, not to the sense of breather means you're going to buy puts and then we start swinging. That would be more volatility, but just watch out if it kind of buys some time, sets a range, and then by Friday, we'll see where the bond market is, how people feel about the squeeze, and then we go from there. And then tomorrow, too, we'll even get some earnings, but we'll talk about that now, because let us get into the play. So, right off the bat, we got to talk about earnings. The plays I'm looking at, I really like Baidu, and sure enough, even till today, a lot of people were talking about China being undervalued. Now, like I just said, that China event did not produce anything. The Xi Jinping Biden thing, they both said the same thing, which is kind of cool. Both of these things they've said privately or on their own state television. They kind of just came together to repeat it, but didn't cause too big of a move. But I do like the aspect of China being undervalued right now. These are one of the only groups of stocks which have not caught in any of the hype, and some rightfully so. There was a lot of fear the China recovery has not materialized, but there's a lot of money sitting on the sidelines, especially for foreign stuff. We have Baba earnings tomorrow. That's going to be one. Baidu a week later. You even got NetEase and a couple of others. Be on the lookout for Tencent and a few other companies, but there is a big undervaluing here, and I'm just kind of anticipating you might start hearing either end of this year, beginning of next year, which is right around the corner, that China recovery story quite quick. Or again, if you think we're really going to run up, I don't think we keep running up without leaving these guys too much far behind. So definitely watching out for those. I think that's going to be very important. That is play number one. Then play number two. This one's linked to a lot. I guess so is play number one, but CSCO. They had really bad earnings. They guided down by like an additional $2 or $3 billion, but it hit the whole space, even Palo Alto Networks. This is where it got weird because their earnings were good, but market took it kind of negatively. But right after CSCO and Palo Alto, both of these names, it caused a huge reaction. Now, CSCO and Palo Alto are different, kind of similar. Now, this is where it gets good, though. Intel started reacting positively during all of this, and they already broke out. So I'm going to be watching all three of these, but literally by tomorrow, I'm sure going to be hearing about Palo Alto and CSCO, and there's going to be a lot of moves pre-market, and even in that first hour, Cisco's already down how many percent? I think about 10 or 10.5. We've seen this move crazy. We've also seen it bounce a lot, too, so this should be a good one to trade. So watch out for that. That is play number two. And then finally, play number three is oil. Now, why I made a trade on this today, I'm not really feeling anything for the long term. A lot of people even asked about, like, what do you think as it relates to the economy? You saw how we tried to do that in 2021, 2022, and the ironic part about all of it, go back to, like, November, what day? We're on, like, November 15th right now. We were a little bit higher in 2022. I guess 2 days later, you were at the exact same price you were at today. Go back here a couple years ago, again, 2021, you were almost about $2, $3 higher than where you're at now. The prices have stayed the same, but like I'm telling you, if the market needs to take a breather, this thing has moved very separate. This commodity, how it's been moving, if you want something to trade, it might be a good one intraday, and I might be looking for it. If the days are slow and we see more moves in commodities, I may be looking for that during the chop of the bonds and market and all of that good stuff. But besides that, I made a couple of other plays today. I closed out of VKTX. I made like $400, sold those shares. I was down on them for a minute, and then I also got out of UAL. Remember that earnings play? I got crushed on it, but I was able to walk away with a profit, so I was very happy about that. So other than that, still riding things out. Still in my other bond play. That one came down from yesterday, given, I mean, you see it right here, but going to be riding and may want to double dip, but still kind of making shorter-term trades on the bonds, and that's about it. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, man, ain't nothing wrong with simple. Simple and get a good balance. Oh, drama-free and always hold the balances. That's way cooler than you think it is. Oh, I don't know if they feel me. Oh, can I get, hey, Chad, drink that water. Stay hydrated. Stay healthy. I hope you feel me, man. But I'm going to see you in the morning. God bless all of you. I hope you wake up and drive and horn.